Today's tech news moves fast, but understanding it shouldn't be hard. That's why Snarful Solutions Group brings you Connecting the Dots, where we break down what's happening in tech and why it matters to you. Now, let's dive in with your hosts.
Imagine a piece of software that doesn't just give you a list of the best flights to Chicago, but actually pulls out your credit card, boosts the hotel, and adds the itinerary to your calendar while you are fast asleep.
Right, like a digital assistant that actually does the work.
Exactly. And today, we're looking at why one single company is betting an unprecedented $122 billion that you are finally ready to hand over the keys to your entire digital life. Welcome to Connecting the Dots, produced by Snarful Solutions Group, broadcasting live from Sacramento, California. I'm Alex.
And I'm Morgan. We are thrilled to be with you this morning.
Happy Wednesday, April 1st, 2026. And look, no, we do not have any elaborate April Fool's pranks planned for you today.
Thank goodness. I hate those.
I know, right? We are playing it completely straight today because the news cycle right now is just, well, it's too consequential to ignore. But before we get to the tech news, let's start with a quick check on the weather.
Yeah, you will definitely need an umbrella if you are stepping out here in Sacramento today.
Oh, for sure. We're looking at showers and thunderstorms likely throughout the day, sitting right around 64 degrees Fahrenheit. And we've got winds blowing about 6 to 12 miles per hour.
And if you are traveling today or maybe tuning in from out of state, please be careful out there. There are currently 394 active weather alerts across the U.S. today.
Wow, almost 400.
Yeah, ranging from severe thunderstorms to high wind warnings. So, definitely check your local listings before you hit the road.
Absolutely. Good advice. Let's pivot over to the markets, though, because yesterday was an incredibly green day across the board.
It really was.
Just a snappy, upbeat market recap from yesterday's close. The Dow surged almost 800 points to close at 46,341.
Huge jump.
Yeah, and the S&P 500 jumped 132 points to 6,528. And checking in on the crypto side of things, Bitcoin is hovering right around 68,419.
A very solid day for investors all around, and honestly, a genuinely solid night for local sports, too.
You'll love to see it. The SF Giants beat the Padres 9-3, and the Oakland A's took down the Braves 5-2.
Just a great night for Bay Area baseball.
It really was. Speaking of great mornings, though, let's talk about how you are starting yours. Today's show is brought to you by Strong Coffee.
Because, look, we all need that morning jolt to get going, but nobody likes that mid-morning crash that usually follows.
Right, the jitters are the worst.
Yeah.
But Strong Coffee is a premium instant coffee that tastes exactly like a traditional brew, but it is packed with 15 grams of protein, MCTs, and adaptogens like ashwagandha.
Which is amazing. It gives you clean, sustained energy without the jitters, which is exactly the kind of mental clarity you need when you are trying to process the complex technology shifts we are covering today.
Seriously, do yourself a favor and upgrade your morning routine. Use promo code SNARFL for 20% off your entire purchase at strongcoffeecompany.com.
That's promo code SNARFL.
Snarfle. All right, let's transition into the core of today's show. It's time for The Morning Star, which is our Snarfle Tech Article Report.
We have a very clear mission today.
We do. We are looking at three massive interconnected stories, all centered around the tech giant OpenAI.
And we're breaking down what their unprecedented moves mean for everyday professionals, businesses, and, families like yours.
I want to start with the sheer scale of the finances here. Because when I first saw the numbers cross the wire, I genuinely thought a financial reporter had made a typo.
I mean, we all did. It's staggering.
OpenAI just closed the largest private funding round in the history of capitalism. They secured $122 billion in committed capital.
Not million. Billion with a B.
Right. And what makes this even wilder is that it was originally projected at $110 billion, and it somehow ballooned to $122 billion by the time the ink actually dried.
Which is just wild.
It is. And this pushes their total post-money valuation, meaning the total value of the company after this new cash is added to their balance sheet, to an astronomical $852 billion.
To really grasp what is happening behind closed doors, we have to look at who's actually writing these checks.
Yeah, who has that kind of money lying around?
Right. Well, this round is anchored by some of the most powerful corporations on the planet. You have Amazon committing up to $50 billion. Wow.
NVIDIA's putting in $30 billion, SoftBank with another $30 billion, and Microsoft is continuing their historical participation.
I have to push back on this $852 billion valuation, though, because it is legitimately breaking my brain.
It's hard to contextualize.
Let's compare this to legacy giants. OpenAI is now valued higher than Visa, higher than JP Morgan Chase, higher than Samsung.
Yeah, that puts it in perspective.
Right. We're talking about a company that basically launched its flagship consumer product, ChatGPT, in late 2022. I just don't understand how the math works here.
It doesn't make sense if you think of them as just a software app.
Exactly. How does a company, less than 4 years into its major commercial era, justify being worth more than banks that have spent a century building global infrastructure? Unless, I guess, we are fundamentally redefining what this company actually is.
You hit the nail on the head right there. It requires a complete redefinition. When Amazon or NVIDIA drops tens of billions of dollars into OpenAI, they are not looking at a software vendor that makes a clever chatbot for high school students writing essays. Right. They aren't paying for a homework helper.
Exactly. They are investing in what OpenAI's own press release calls the infrastructure layer for intelligence itself.
The infrastructure layer. So we're talking about something more akin to the electrical grid or the transcontinental railroad.
Precisely. Think about the transition from the industrial age to the digital age. Whoever owned the physical infrastructure, the railroads, the telecom lines, the undersea internet cables, they controlled the global economy.
That makes a lot of sense.
In the artificial intelligence era, these massive corporations believe that OpenAI is building the digital railroads of the 21st century. Amazon and Microsoft want to ensure their cloud servers are the ones powering it.
And NVIDIA wants to ensure their physical chips are the ones running it.
Yep. It is an infrastructural land grab on a scale we haven't seen since the Gilded Age.
Here is where the story takes a fascinating turn for you listening at home, though. We're used to these pre-IPO funding rounds being an exclusive, walled-off club for Silicon Valley billionaires and elite hedge funds.
It's usually a total insider's game.
It really is. But there is a huge twist here. For the first time, everyday retail investors actually got a piece of the pie. The sources note that $3 billion of this round was raised from individual investors.
Yeah, through traditional bank channels and ARK Invest ETFs. And all of this is happening ahead of an anticipated initial public offering, an IPO, which is expected as early as late 2026.
Let's explain why that matters to the everyday person listening right now.
Mm-hmm.
Usually, if you are a family trying to invest your retirement savings, you only get access to a tech giant after it goes public.
Right, after all the big money has been made.
Exactly. By the time the bell rings at the stock exchange, the institutional investors have already made their staggering multiples, and the retail investor ends up buying in at the top of the market.
Which is why the ETF mechanism here is so crucial. An ETF, or exchange-traded fund, allows everyday people to buy a single share that represents a basket of investments.
So it's more accessible.
Very accessible. By funneling $3 billion through these vehicles, OpenAI is essentially letting the everyday professional get in on the mezzanine level before the public market gets its hands on it.
But they aren't doing this out of the goodness of their hearts, right? I mean, there has to be a strategic reason to let retail investors into a private funding round.
Oh, absolutely. It's a calculated loyalty play. By bringing retail investors in now, OpenAI is building a fiercely loyal shareholder base. They're creating a massive constituency of everyday people who now have a vested financial interest in their 401ks and portfolios to see OpenAI succeed. It embeds the company's financial success into the American middle class.
That is incredibly smart. But raising $122 billion isn't a victory lap, is it? It's kind of a survival tactic.
Definitely a survival tactic.
Because to justify a valuation that literally exceeds the gross domestic product of countries like Switzerland or Poland, a company cannot just run on hype and loyal fans. It needs cold, hard cash flow.
And lots of it.
Right. And right now, OpenAI is setting cash on fire just to keep the lights on. Which brings us to our second story, the revenue engine versus the reality of cost cutting.
And, the top line numbers are certainly impressive. OpenAI just revealed they are now generating $2 billion in revenue per month.
$2 billion a month. Wow.
Yeah, and to put that in perspective, they reported $13.1 billion for the entirety of 2025. Now they are on a $24 billion annual run rate, meaning if they just maintain their current monthly pace, they will pull in $24 billion this year.
The user metrics driving that are staggering too. ChatGPT now have 900 million weekly active users.
Almost a billion people.
That is nearly 1 billion people interacting with this technology every single week, and out of those, they have 50 million paying subscribers.
The real secret weapon, though, isn't that $20 monthly consumer subscription. It is the business-to-business sector, the enterprise side.
Oh, for sure.
Our sources show that enterprise accounts for over 40% of their revenue right now. And they are on track to reach parity, a 50-50 split between consumer and enterprise revenue by the end of 2026.
Let's unpack that because it directly impacts the software you are probably using at your office job right now. This growth is driven by APIs.
And an API is basically...
An API is essentially a software bridge that lets two different programs talk to each other. So when a global logistics company wants to automate their supply chain routing, or a massive bank wants to instantly analyze thousands of mortgage applications, they don't have their employees typing into the ChatGPT website.
Right, that would be incredibly inefficient.
Exactly. They plug OpenAI's brain directly into their own internal software via an API.
And that is how you build a resilient business. Because once a Fortune 500 company integrates your intelligence layer into their daily operations, they don't just cancel their subscription on a whim.
No, it's too baked in.
Exactly. It becomes as essential to them as Microsoft Excel or Amazon Web Services.
But here is the existential catch. Despite generating $2 billion a month, and despite securing $122 billion in funding, OpenAI is bleeding cash and they are not profitable.
Because the sheer physical cost of compute is staggering. And when we say compute, we aren't talking about some invisible magic cloud.
Right, it's highly physical.
We are talking about massive physical warehouses filled with millions of NVIDIA chips, requiring the electricity output of a small city just to keep them running and cool down. Every time a user asks a question, it drains real-world resources.
I look at OpenAI right now, and it feels like a family where the parents have these incredible, high-powered tech executive salaries. They're bringing in millions of dollars a year.
Right, making bank.
But they still have to sit around the kitchen table and cancel their Netflix subscription because their mortgage on a 10-bedroom mansion is bleeding them dry.
It's a very apt way to frame the unit economics. The revenue is spectacular, but the overhead is unprecedented in the history of business, which is why we are seeing them make some brutal, calculated cuts.
Yeah, they recently completely shut down their highly anticipated short-form video app, Sora.
I was so bummed about that.
I know, when Sora was announced, it was supposed to revolutionize Hollywood. People thought the film industry was over, but they shut it down because user engagement fell and a major licensing deal with Disney completely collapsed.
Yeah, that Disney deal falling through was huge.
It was. They also halted plans for an erotic, unfiltered version of ChatGPT that was in development. All of this just to manage costs.
The retreat from Sora is incredibly instructive, though. It explains the core problem with the compute costs we just talked about.
How so?
Well, generating a 60-second high-definition video of, say, a dog riding a skateboard on the moon requires exponentially more server power and electricity than generating a paragraph of text.
Oh, that makes sense.
If consumers aren't willing to pay a massive premium for that video generation, and if studios like Disney are backing away, it goes from being a technological marvel to a massive financial sinkhole.
It's the difference between a parlor trick and a utility. Is this a sign that the consumer novelty era of AI is ending? Are we moving past the phase of making funny deep fakes and entering an era where only practical, enterprise-driven tools survive?
Yes, I think so. The CFO's moves signal a harsh reality. Not every frontier of generative AI is commercially viable in the short term. They have to focus on what pays the bills.
Like the enterprise tools.
Exactly. A tool that helps a coder write software 50% faster, or a financial analyst parse regulatory filings in 3 seconds. That is what enterprise clients will pay billions for.
But if the parlor tricks are over and highly practical, invisible enterprise adoption is the future, how does OpenAI plan to keep those 900 million everyday consumers coming back? People who aren't necessarily coding software or analyzing financial data.
Which brings us to our third and final story, the superapp vision.
OpenAI is fundamentally shifting its consumer strategy. They're moving away from just trying to make the AI smarter and focusing heavily on making it easier to use.
And they're doing this by building an integrated AI superapp.
Up until now, using AI has still required a bit of cognitive load from the user, right?
Yeah.
You have to know how to write a highly specific prompt. You have to juggle different browser tabs.
Yeah, prompt engineering is practically its own job right now.
Exactly. But OpenAI wants to combine ChatGPT, their codex coding tool, their web browsing capabilities, and something they call agentic capabilities into one single seamless interface.
Let's break down agentic capabilities because it sounds like a Silicon Valley buzzword, but it is actually the key to this whole transition.
Okay, lay it on us.
This is an agent-first approach. Instead of the AI just being a really smart search engine that answers your questions a talker, it actively becomes a doer. It performs multi-step, complex tasks on your behalf.
The distinction between a talker and a doer is the holy grail of this industry. Right now, if you want to go on vacation, you might ask an AI, what are the best hotels in Chicago?
And it gives you a helpful list.
Right. But then the burden is back on you. You have to open a new tab, go to a travel website, compare the flights, pull out your physical credit card, type in the numbers, book the hotel, and manually put it in your calendar.
So much friction. But with an agent-first super app, you don't ask it for a list. You just say, plan a weekend trip to Chicago for 2, compare the best flight options under $500, book the tickets, and reserve a room near the Riverwalk.
It just does it.
Yep. The AI agent actually navigates out into the web, bypasses the user interface of the booking sites, talks directly to their servers via APIs, inputs your stored data, and completes the entire transaction for you.
It acts as a fully autonomous digital butler. And this shift isn't just about convenience, is it? It is a defensive maneuver.
Very much so.
They are looking over their shoulders at fierce competition. Anthropic's Claude is incredibly popular with software developers right now because of its nuanced reasoning, and Google's Gemini is deeply integrated into the massive ecosystem of Google Workspace, Gmail, and Android. OpenAI needs a moat.
This evolution reminds me so much of the smartphone transition in the early 2000s. We used to leave the house carrying a cell phone for calls, a separate digital camera for photos, an MP3 player for music, and a bulky GPS device for the car.
Oh man, I remember having a massive Garmin GPS stuck to my windshield.
Right. And then the iPhone came out and it just swallowed all of that hardware into one piece of glass. It sounds like OpenAI wants to do the exact same thing, but instead of swallowing our physical hardware, they want to swallow our software.
That analogy is spot on. Why open a separate app for your email, a separate app for your calendar, a separate app for your banking, and a separate app to order groceries if one single intelligence layer can manage all of it seamlessly in the background?
They want to be the ultimate middleman for your entire digital existence.
Which sounds incredibly convenient. I mean, for busy professionals or for families trying to manage chaotic schedules, having a system that just handles the busy work is a dream.
It sounds great on paper.
But I have to draw a line here. Are we really comfortable handing the keys to our entire digital lives over to a single, unified system? We are talking about giving one private corporation access to our personal emails, our financial logins, our travel documents, our private schedules.
The privacy and security implications are, frankly, terrifying. If this super app becomes the primary interface for our lives, it creates a massive single point of failure.
A huge target for hackers.
Exactly. If that agent gets hacked, or if the data handling protocols fail, the entire architecture of a person's life is compromised. It requires an immense, almost unprecedented amount of trust in OpenAI's cybersecurity infrastructure.
And beyond the security risk to the user, what happens to the global economy of software? If I don't need to open the Yelp app to find a restaurant or open the Expedia app to book a flight because my AI agent just talks to their servers in the background, does that completely destroy their business models?
It fractures the entire app economy. Think about how those companies make money. They rely on you looking at their screen. They show you banner ads. They track your scrolling behavior. They capture your data through direct interaction.
But if I never open the app?
If you never open their app again, their ad revenue goes to zero. They're suddenly demoted from being consumer-facing brands to being invisible background utilities that OpenAI simply extracts data from.
Wow. It is a fundamental rewiring of how the internet functions. We are moving from a world of clicking, scrolling, and browsing to a world of commanding, delegating, and trusting.
Which brings us full circle and perfectly explains that $852 billion valuation we started with. If they successfully become the single operating system for human daily life, $852 billion isn't an overvaluation.
It might actually be a bargain.
Exactly. It might be a steal.
That is a staggering reality to process. Okay, before we wrap up, here's one more thing to know.
We want to give a quick shout out to our second sponsor today, Old Glory.
Yes. Old Glory is an iconic music and sports fan merch store that has great stuff for your techie friends. Whether they like to hit the golf course in their pins and aces polos, or they are just walking the dog in their Sconies Stemises, you can get them the perfect vintage band tee or sports gear to complete their weekend look.
It is the perfect place to find a unique, high-quality gift. Use promo code SNARFL at checkout to get 15% off your entire purchase. The website is oldglory.com.
All right, let's briefly recap the real-world narrative we just walked through today, because it paints a very clear picture of where our technology is heading in 2026. First, OpenAI just secured an unprecedented $122 billion in funding, bringing everyday retail investors along for the ride through ETFs and cementing their status as a foundational infrastructure provider for the digital age.
Second, despite generating a staggering $2 billion in monthly revenue, the physical reality of running these AI models is bleeding them dry.
So they have to cut back.
Right, they're having to trim the fat, completely shutting down experimental video tools like Sora to focus entirely on reliable API-driven revenue for enterprise businesses.
And finally, they are using that focused capital to build a single super app. An AI that shifts from just talking to you to actually executing complex tasks for you, designed to run your daily life across multiple platforms.
They are executing a massive pivot. They are no longer a quirky research lab. They are positioning themselves to be the world's most essential utility company.
They really are. And I want to leave you with a final provocative thought to mull over today. We talked about how this super app could change how we interact with different companies, but let's take it a step further.
Okay, I'm listening.
If OpenAI successfully builds an agent that acts as the primary interface for absolutely everything we do on a computer or a phone, will the traditional app store eventually become completely obsolete?
Oh man, that is the ultimate existential question for Apple and Google right now.
Think about it. If the AI just does the tasks in the background, communicating directly with other servers, do we ever actually need to download or open another app again? Will the screens on our phones just become a single minimalist chat interface, while the rich visual applications we've spent the last 2 decades building just slowly fade away into the background?
It's definitely something to think about the next time you tap a colorful icon on your home screen.
The digital landscape is shifting right beneath our feet, and the rules of the internet are being rewritten in real time.
It truly is.
We're here to help at Snarful, so reach out on our website if you have any more questions.
That's a wrap on today's top stories. Remember, tech doesn't have to be complicated, and we're here to help connect the dots. If you've got questions or want to learn more, visit us at snarful.com. Thanks for listening, and we'll catch you next time.